The Zacks computer and technology sector in the USA looks like an attractive area to stay invested in. It is leading the way on Q3 earnings growth, and this month we take a deeper dive because of that into this all important Q3 earnings growth area, and we do that with our chief equity strategist and economist, John Blank. John, what are the elements that continue to make this sector an earnings leader?
Well, Terry, right now with 258 out of 500 companies, we are seeing 9% growth on earnings with 5% revenue growth. And all of that is coming out of the tech sector, which Magnificent Seven are expected to be up 20% on 14% higher revenue. So at the end of the day, these big tech companies at 20% earnings growth and 14% revenue growth are the bulk of what's going on that's hot in this market.
So does being an earnings leader translate to continued market leader as well?
Well, we shall see. I mean, there is concern about the valuations always, and they may well have run ahead of themselves. So it's not necessarily true that we'll see, a straight one-for-one move between the strong earnings and revenue growth and the share price.
Taking a little bit of a closer look, Tesla was one of the first of the big U.S. tech companies to report third quarter earnings back on October the 23rd. The company reported a higher than expected third quarter profit with improved margins, yet it's being reported in the media that Wall Street continues to reevaluate whether or not to keep Tesla in that Magnificent Seven group. Why is that?
Well, simply put, Terry, it hasn't gone anywhere in a long time. I mean, if you look at a one-year share price chart, I'm talking today, it's at $250 a share. And at the start of 2024, it was at $250 a share with a long and tough dip down to 150. So we're at the top of a range trade, and that's not really that attractive. You got a forward PE ratio of 105 and a PEG ratio of 6.8 on Tesla. So, if you want to talk about an overvalued stock, that's probably the one you want to talk about.
Talking a little broader, the Magnificent Seven tech stocks I saw forecasts growing earnings year over year this year or this quarter by about 18%. You say 20%, right? Is that what you're expecting?
Yep, I'm expecting 20%. So basically, you're looking at, Mark, if the overall reports through 168 companies at 9%, it's basically double of the standard.
So are investors looking for clues then in these reports as to whether emerging technology is really driving profits?
Yeah, they are, Terry. They're certainly looking at ChatGPT in terms of Microsoft, which they've made a big 49%. They own 49% of that, just under a majority. They put billions into it. So the real leadership in AI is still ChatGPT. And the other one that was big was the Gemini AI service at Google, and that also got a look. So yes, the AI story within these mega caps is dominant, and what we're learning should be no surprise, they're still not profit centers and might not be for some time.
AI continues to be a focus, you're saying. For how long? Any way to tell?
Oh, it'll be for many, many years. But you got to remember, we also have the new news in that Supermicro computer, had their accountant drop them. So, now Supermicro computer is actually below, a negative return for the year. So the euphoria is clearly off and some of the fraud is clearly showing up. So it's going to lead to a reassessment.
So given the recent surge in big tech stocks, what kind of market reaction are you expecting from these company reports going forward?
It's a big question mark for me, Terry. I think it's always hard in front of an election and after a momentum run to decide when all the good news is priced in. It's certainly a lot of good news there, but it's been priced in for so long. It's very difficult to know when the market decides it's too much, too long. And, asking anybody for that answer is not going to get a very solid answer back from.
All right. Aside from these big tech companies, in the Zacks #1 strong buy category, you're keeping an eye on Vertiv Holdings, Advantest, and TransUnion.
Yeah, Vertiv Holdings is a darling stock for the digital infrastructure business. They are basically in this business of offering hardware, software, and analytics for the cloud. These data centers, they're headquartered in Columbus, and I've got a $112 share price with a $42 billion market cap. But here, again, you've got a 42 forward PE ratio, Terry. All the good news is likely priced in on this, but it is a number one ranked stock.
And then Adventist.
Advantest, ticker ATEYY. I've got a $60 share price. Again, I got a forward PE ratio of 76. So you've got to ask yourself, even though this is the world's leading automated test equipment supplier to the semiconductor industry, again, it's looking like all the good news is priced in.
And then TransUnion.
TransUnion is actually in Chicago, Terry. They provide, risk and information to business and consumers on, credit information. They're in the business information sector, which is top 7%. And you've got a PE ratio of 26, which is much more palatable. And get a like a stock like this at these levels, we get a target price of 124. It trades at 103. So that's probably the one I like today.
Our chief equity strategist and economist, John Blank, on the big tech stocks, and a couple of others at the end here as well. With John, I'm Terry Ruffalo. Here's something you may want to check out. Aim your portfolio for 24% or more. That's 24% per year or more. Zacks Investor Collection gives you 30-day access to all of our long-term private buys and sells for only $1. Visit Zacks.com/promo for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.